Good afternoon. My name is Steve Hensley. I'm the Program Director of the Saginaw County Chamber. Welcome to the Saginaw County Young Professionals Network Homebuyers Webinar, YPN Presents Navigating the Local Real Estate Market. And a special welcome to the panelists as well as audience guests who are joining us here today. Through the YPN's partnership with the Saginaw County Board of Realtors, we're excited to host this event with a knowledgeable group of chamber members and real estate industry experts. Despite COVID-19 and many other economic constraints happening in our world today, the real estate market appears to be soaring strong. We're looking forward to learning from our group of panelists today what the real estate forecast looks like moving forward, as well as their offering of insight and direction to those of us who may be considering purchasing a home, refinancing, or upgrading. To begin, Zach Moulton, our 2020 YPN Chair and Financial Advisor with RWS Financial Group, will be our moderator and host for this event. We thank Zach for composing these series of questions, along with design and assistance from the YPN Steering Committee. We have allotted time for approximately the next hour where Zach will be asking each panelist some questions pertaining to many of the topics we've touched on. At approximately 1 o'clock, we will begin taking questions from our guests within the audience, and we ask that you simply enter the question through the chat feature. During the initial presentation, if you do discover a relevant question that you would like to ask in relation to a topic being covered at that time, please still submit your question through the chat, and Zach will try and include it. We have a lot of great information to share, and we'll try to get to every question. If not, we'll forward it to the panelists and you will be answered directly. But before we go into the presentation, our YPN events are made possible thanks to our annual YPN sponsors. We would like to thank our platinum sponsor, Blue Cross, Blue Shield, and Blue Care Network of Michigan, our silver sponsor, First State Bank, Covenant Healthcare, Fabiano Brothers Incorporated, Next Year Automotive, and TriStar Trust Bank. Our patron sponsors, Beerline Companies Incorporated, Capoco Community Credit Union, Glass Tender Incorporated, Hemlock Semiconductor, Operations LLC, Independent Bank, Mobile Medical Response Incorporated, Saginaw Valley State University, and the State Bank. So once again, we'd like to give our round of thank you to our sponsors and appreciate their support. And now, to begin our program, I'd like to turn it over to Zach Moulton to share a few words about this event. Welcome, Zach.
Thanks, Steve. I would like to first begin by adequately noting that the mission of the Saginaw County YPN is to support the attraction and retention of young talent to the Saginaw Valley and Great Lakes Bay region while developing the next generations of leaders. Of course, choosing where you live in our community and becoming privy to our geographical and economical environment is critically important. It comes as no surprise that in our region, compared to others, just to name a few, residents can experience entertainment, retail, and culture forms at fairly modest costs. More namely, our real estate market also fits into this category. Not to mention, we are undoubtedly living in unprecedented times, but home values continue to increase and interest rates are at enormous lows. Therefore, on behalf of the entire YPN, we are encouraged to bring you a worthwhile, informative event that will be certain to provide advice and direction to anyone, no matter what phase of home buying, refinance, or upgrading you are planning to do. All right, with that, it's my pleasure to introduce today's feature panelists who will provide tips to help you in all your local real estate needs. First, we have Andrew. Andrew, if you could tell us a little bit about yourself.
Yeah, my name is Andrew Houck. I'm the broker owner at Century 21 Signature Realty. We have an office right here in Saginaw on State Street and quite a few other ones surrounding the area. So it's been around since 2005. Myself personally, I graduated from Heritage locally, Heritage High School, went to Grand Valley to start school, came back and got my undergrad and graduate degrees at Saginaw Valley while working in real estate. So Been licensed since 2009. So got my license when I was 21 years old. So pretty much all I know is real estate.
Thanks, Andrew. Julie, if you could go next.
Unmute yourself, Julie. Go to the bottom left-hand side of your computer and unmute yourself.
There we go.
It's been probably a week or two I've been on a Zoom, but anyway, broker owner of Real Estate One, also on State Street. I went to school for business management in Illinois and started flipping homes probably when in my younger years. Did that for many years, got my license in 2005, stopped flipping, been a full-time realtor ever since.
All right, thanks, Julie. Annette?
Good morning, Annette Dory, mortgage loan officer with Lake Michigan Credit Union. I think I'm way older than you guys. I've been in the business for 30-some years now and started out in processing, went to closing, originating, managing. So seen the gamut, and right now we are just blessed to be extremely busy. And whether it's refinancing or purchases, we've been going at it 10, 12 hours a day since the end of February. So Lake Michigan is located on State Street across from Arby's. And we originated in the Grand Rapids area as a teachers credit union. And when the housing market kind of took a little bit of a dive a few years ago, we just decided that we needed a little bit more of a friendly feel. If it doesn't fit in the box, how do we make it work? So there were a few of us that left Independent Bank and started at the credit union as a mortgage division here, and now we have a full-time branch. So thank you.
Thanks, Annette. Laura?
Hi, everyone. I've been with Isabella Bank for about 3 years, and I was with Flagstar Bank for 15 years. So I've been in the business since '95. Up and down and all around the mortgage industry, of course. I got 2 locations in Saginaw, downtown, and over on Bay in Tittawassee. And yes, it is very busy, just like Annette said. It's just unbelievable.
All right, thanks, Laura. Brenda?
Hi, yes, good afternoon, everyone. So yes, my name is Brenda Koka. I have a couple different degrees, most of them in tech and business. The majority of my experience is in tech and insurance. Currently, I am the account manager at Saginaw Bay Area Title. We have over 24 offices throughout the state. Our Saginaw office is located on Christie Way. And thanks for having me.
Thanks. Susan? Might have to unmute yourself, Susan.
I'm sorry, there we go. Hi, I'm Susan Houlihan. I'm the Saginaw County Manager of Diversified National Title. Our office is on State Street in the Gold Building. I am probably the eldest of all. I have 38 years experience in the title industry, started in Naples, Florida, and moved to Michigan in '95. We ensure that a owner or a buyer of a property will own their home free and clear from any liens. We also ensure a lender that they'll have a first lien position once the mortgage is signed and recorded. Thank you.
All right. Thank you very much for the panelists for being here today with us. And again, as Steve noted, we will be designated about the last 20 minutes or so to take questions from all the guests here today. However, if you have something that's relevant to the question we're asking, go ahead, feel free to type that question in the chat, and we'll try to get to those as well. So without further ado, let's jump in and get started. All right, this first one will be for Andrew. What is the best thing to look for when selecting a realtor?
Okay, well, there's a few things that I try to preach to everybody. And, you know, the first of all, you need to find somebody that has experience in the area that you're looking, the price point that you're looking, and the style of home that you're looking. Experience can be gained a variety of ways. Real estate agents have backgrounds all over the place, from working in the financial industry to home construction at some point in time, owning and selling their own homes through the years. So time in real estate doesn't necessarily equate to a better agent necessarily, but you want somebody that has the experience in what you're looking for. And then on top of that, you want to find an agent that you feel you can build a professional relationship with, not just somebody that you look at as somebody that opens the doors for you. If that's the way that your agent is, just you don't think their only worth is to unlock doors, it's probably not the right fit. Somebody that's providing a value to you that you're learning from, that is the route. Whether they're young, old, middle-aged, new to the business, experienced, if you see a value, then they're a value and they're going to be able to help you out.
All right, Julie, do you have anything to add to that?
Okay, I just wanted to make sure I was unmuted. Okay. Yeah, I definitely agree with Andrew. Experience is very important. There's many different kind of loan programs out there. Not all of them qualify for whatever the buyer's program is. So it is good to know that up front before you shop for a home that you cannot actually purchase. It's good to know a team of experts. If it's an agent, make sure that they are aware of things that are going on in the market, and that you want someone who is of integrity as well.
All right. The same for Julie here. Can you talk to the importance and processes of home inspections?
I think it's very important. There are buyers out there that maybe they flip a lot of properties and so they do their own inspection. But if you're truly a new buyer, you should always have a home inspection, because even the seller is not even aware of some items in their home that they may have issues with, and they are learning at the same time the inspection is happening. So it's very important to have the inspection, to have a thorough inspection, so you don't buy something and find out a problem later.
All right, Andrew, you have anything to add to that question?
Yeah, so I always look at the home inspection as the time for the buyer to really get like intimate with the property. When you're there for a showing, you're just walking around looking. But when you're there for 2 or 3 hours with an inspector, I mean, you get to really like kind of be in the house, get the overall feel of what it's like to spend an extended period of time there. So really just use that time to ask questions, take notes, look into things that you didn't have a chance to look into, open closet doors, cabinets, stuff of that nature, and really just get a good feel for the house. That's really the importance of it. It's not to create a laundry list of items to have a seller repair. That's a renter mindset, not a home buyer. There may be big items that come up that you need addressed or you need a price change to accommodate. But there's always going to be little quirks to a house. And so you have to just really see after the inspection, does that meet what your expectations were going into it?
Perfect. Thank you very much. All right, the next one are going to be for our lenders, Annette and Laura. Annette, if you want to field this question first.
Certainly.
What is the best thing to look for when selecting a bank or lender?
What is the best thing to look for? So I'm going to piggyback on Andrew. I think you need to be comfortable with the person as well. Build a relationship because you're going to be working with that person for 30 to 60 days, depending on the type of loan that you're doing. I specialize, or I seem to, in first-time home buying, government lending, MISHA, first-time home buyers. So I believe that the real estate agents are going to know based on their questioning of the buyer also as to where to send that buyer, depending on what I have to offer at Lake Michigan versus Laura at Isabella. So the experienced agents already have a mindset as to who they would like to work with as well.
All right, Laura, anything to add to that question?
Unmute, honey.
Sorry about that. It's sort of like buying a pair of pants. One size doesn't fit all. You got to shop around. There's people out there where you can connect to. There's some people where you can't connect to. You just have to be really honest with these people these days. I hear like our famous Quicken Loans where it's like, okay, nobody's telling me this, but you're telling me this. They just got to understand the terms, and that's what we're here for. I know Annette does the same thing. We like to educate people in the loan process. We don't like them to have questions. We want them to learn and be comfortable on this big purchase that they're going to do for the rest of their lives for a while, and go from another house to another house and give them some pointers on what they can do going forward.
All right, thank you. And then Laura, with credit scores typically being a pretty important thing as far as what the general idea is for getting good rates on loans, and that's kind of what's out there as far as information. What is some best practices to kind of increase your credit score if you're, a year or a couple of years away from getting a loan for a home?
I like when I look at a credit report, I look at the whole credit report. If there's collections, judgments, charge-offs, late payments, a lot of loan officers there don't go into that with people, but I do, and I know Annette does too, because we're very similar. Where again, we educate the people. I suggest to call the creditor to get the collection paid off, or try to settle for less or make payments on it. These days, you got to show 3 lines of credit. Fannie, Freddie, and Ginnie Mae, they all want that. If they don't have it, then we go to alternative credit where they really want to see people making their payments on time with rent. So we get a letter from the landlord. Sometimes we have to go to like car insurance and all that. But I always people, you really got to watch your credit, because if you get a medical collection, which a lot of them aren't aware of, it goes on your credit report. I always stress to them, when you get a bill in the mail, it's for a reason. Always call the doctor's office to make sure that you do owe it if you don't think you do. And there's a lot of ways to do that. They just have to take everything in and remember, you got to watch what you're buying and what your services are to make sure you don't have a payment left out there.
All right, and Annette, could you kind of talk to what is a good rule of thumb as far as down payments?
Well, there's 4 areas. When I sit down with the buyer, I'm going to look at where their income is coming from, how much cash they do or don't have to work with, what their credit is, and then what their monthly debts are. So all of those things come into play when we're talking about down payment. Some already know that the experienced buyers, 10%, 20% down. Some younger people don't have any. So I'm going to look at, maybe the MISHA where they need 1% of the sales price, or they're looking in rural areas. So I'm going to be looking in maybe a rural development type loan. So I have to sit with them. It's not just a canned answer. And when people call and say, well, what's your rate? Well, I can give you several rates. We have several different programs as well as what Laura does, but that's not, I'm not giving you the best answer if I'm not looking at the whole picture. I could give you a 30-year fixed rate, but really you need maybe the MISHDA rate, or you need a doctor loan, or, you know, there's a lot that goes into that area that you're asking about.
All right, thank you. Next one will go to Brenda. What is the best thing to look at when selecting a title agency or company?
Yes. So for title, I think probably the two things, there's a lot obviously that goes into it, and you know, as far as the searching, examining, you know, if escrow, a lot of things that go into it. But honestly, the two biggest things that probably are most important is that the coordination of the transaction is handled efficiently and effectively, that there's communication, and that they provide remarkable customer service. So, you know, with time, a lot of agents, once they're in the industry and so forth, build relationships with their lenders and with different title agencies, and they're able to be able to know kind of like how those different companies, facilities work. And again, probably the biggest two things is communication, how they handle the transaction from beginning to close, and that they provide great customer service.
All right. Susan, do you have anything to add to that?
Yes, relationships with your agents and lenders, attorneys, very important to know what the customer is looking for. The one thing that pricing is pretty standard across the board. We are regulated by the state of Michigan with regards to our pricing. So service is the main key, and relationships always.
All right. Going back to the real estate side of things, Andrew, if you could kind of talk to what you see as the best and worst home improvement projects for people who are looking to kind of update their homes, but also looking to add some value to that.
Yeah, you know, it's a loaded question, because you can do home improvement projects that cost a few $100s, and you can do home improvement projects that, you know, cost tens of thousands of dollars. You know, every house is a little different, but in my experience, the items that actually go the furthest and you get the best bang for your buck are the really simple items, sprucing up and simplifying the landscaping, adding new mulch, maybe replacing some shrubs, trimming trees, making sure your grass looks really good. And then paint and carpet, it just goes such a long way. Getting rid of old light fixtures, old door handles and kitchen hardware, appliances, those easy items that don't cost a lot in labor, you're typically going to get your best bang for. Now that there's exceptions where obviously a new kitchen or a fence or finishing a basement will add a ton of value to your home, but you know, you can't go into a house that you purchased that has a 10-year-old kitchen and rip it out and put a $30,000 kitchen in and get that value out of it. So, you know, if it's a very old home and you're putting in the big changes, you'll get that value back. But those little items that really freshen up a house and you don't have a lot of labor cost involved, you're really going to get your best bang for.
All right. And what are kind of the worst that you usually see, big projects that don't essentially are money that they're putting, you know, maybe a little bit down the drain because there's no way they're going to get that money back?
Well, I know this is probably going to be hard to hear for some people, but putting in a pool, you might get some great enjoyment out of it. But, you know, if you spend $40,000 on a pool, your $150,000 house is not going to be worth $190,000 just because it has a pool. So you're definitely losing value right off the bat by adding a pool. You know, the other item on top of that, I would just say, again, it's updating stuff that has been recently updated, but you might not like the style. That could hurt you in the long run. And then on top of that, it would just be, you know, if you're doing DIY home improvements, making sure you do a quality job. That's probably the worst thing, is when a homeowner does their own kitchen or bathroom renovation and it doesn't meet the quality of the rest of the house. Because even though it's new, the next home buyer is going to go in there and say, I have to redo this. So that's completely sunk cost at that point.
All right, thank you. Julie, this one's for you. With markets so hot right now in the real estate sector, what is the best way to make sure you don't miss out on a home that you want?
Third one.
I just want to
Julie?
make sure I'm not muted.
Yep. Nope, you're good.
Okay. So it's a tricky market right now because it's very competitive. So if you have a house that is contingent, you're probably not going to win in a multiple offer situation. So it's pretty common right now where people are risking to sell their home and then finding another home in that time frame. So if you're purchasing a home and you have to sell another home, you probably will not get it, if that makes sense, if it's in a multiple offer situation. Because contingents are the sellers do not want to wait on a whim to see if you sell. So there's bridge loans out there for people who really want to purchase something and they want to sell later, that they can do if they qualify for, and then they can do it at that time. I've had people this year even use their 401k if they have to use it, but I have been able to sell their home and find them something, and I gave them a little bit more occupancy time on their sale, so they were actually able to purchase and not even have to tap into their 401k. So it's just it's a competitive market right now for sure.
And it is. All right, switching over to the lender side of things real quick. Annette, could you just talk about any first-time home buyer essentially looking at incentives that might be available? I know there's probably a lot, but maybe try to get some ones that are generally available for the most people in this situation.
Let's see. We have several 3% down programs. So and we have specifics also for teachers and nurses and people that work for the county and the hospitals. I again use the MISHDA funds a lot. And the reason why is if they come in and they simply have, you know, very low money to work with and maybe a little bit higher debt to income, I'm going to probably put them in the MISHDA, where MISHDA is the Michigan State Housing Development Authority. They will lend you up to $7,500 towards down payment and closing costs. There's no payment on that money, and there's no interest, but you do have to pay that back when you sell or refinance. If you have not owned a home in the last 3 years, you're still considered, as far as we are concerned, a first-time home buyer. So it's not necessarily limited to area. So again, be prepared, you know, going through the process to talking to the lender. Julie and Andrew would say, have you spoken to a lender yet? You need to get with Annette or Laura. You need to go through, have credit run. I'm not going to be providing a pre-approval letter unless I see income and have run credit and have run the numbers. And that's my name on that letter. So I need to know what we're doing. So we have several to choose from. It's again going to go back to the 4 areas of what that buyer has in their situation.
All right, thank you. For Laura, with a growing trend out there, moving to a 15-year mortgage, could you speak to the pros and cons of the 15-year mortgage over the 30-year mortgage?
Well, it all depends on where they're at in their life, really. If they have like a savings going on, if they're with their jobs a long time, because usually the 15-year is pretty much doubling their payment in some ways. It's a case by case, depending on the loan amount, of course. A lot of people these days are refinancing into a 15-year because they see the benefits of it. Usually home buyers, they don't get into that because, they're just getting their feet wet into a house. And I do go back and forth with them. Sometimes they want to see what the difference is between 15 years, 20 years, or 30 years. I go ahead and give it to them and show them the difference on what the payment is. Some like it and some say, well, this is my first house. I'm going to first do this, but I can put more in the principal, right? And I said, yes, you can always put more in your principal. So it's case by case again.
All right. And then could you speak to, I know there's also somewhat of a trend as far as financial advisors recommendations, such as myself, that sometimes it is better just to get the 30-year and pay on it like you would pay a 15-year. That way, just especially now, people are kind of realizing that with COVID and losing income and jobs, if you're getting stuck in that 15-year compared to having the flexibility of backing off payments in times like this. Could you speak to that if you see that as a trend, or is that wise advice or something that should not be done?
They have people go into a 15-year for a first-time home buyer? Is that what you're talking about?
No. If they were thinking about doing a 15-year, they end up doing a 30-year, but then paying on it to pay off in 15 years, having the flexibility to come back for job loss or, things like that.
Oh, to refinance it into like a 20-year or 30-year. Is that what you're saying? You're kind of cutting out on my iPhone. It depends on what they want. Some people can refinance and do a 20-year or 30-year. Sometimes they just take out a home equity line of credit to pay off their debt, which is a lot cheaper. Again, it all depends on what their current situation is, if it will help in the long run.
All right. Annette, do you have anything to add to that?
Yeah, as Laura stated, I'll provide those numbers, but again, I'm going to step back and play a little bit of a mom figure and say, do you really want to be stuck with this? I'm commissioned, been to a 15, gone back to a 30. I don't want to put myself into the position where I'm struggling. I'm stressed about making a payment. If I have funds available above and beyond my normal payment, I can put it towards principal. None of our loans have any prepayment penalty. I will go back and forth with that customer. I do not want my house back, and I don't want to put them in a position where they cannot make that payment. So I think that Laura's probably on track with the right answer, and the older generation will do the 15-year, and the younger, well, actually, you kind of have both. I mean, the financial analyst will tell you a 30-year. Use our money versus your money.
Yeah.
All right, thank you so much. Next one, moving back over to the title side of things. Susan, if you can just talk a little bit about title insurance and the benefits of those.
Certainly. Well, what we do is we receive a purchase agreement, a legal binding document that the buyers and sellers have agreed upon. We look at the property, we do a thorough search of the public records, and we set forth the requirements that would be necessary to provide a clear title to a buyer and to provide a first lien to a lender. We're looking for taxes. We're looking for any liens that are on the property. We're looking to see if the property is in a trust, and if so, who the trustee of the trust is, the authorized party to sign the closing documents to sell. Maybe it's probate, maybe there's a death in the chain of title. We would have to verify that we have the correct person signing over the property to the buyer. This is their biggest investment, more than likely. So we do want to make sure that they will own it free and clear. We have situations where there's divorces, and in the divorce judgment, it may say that one party is owing the other party money. They may have a lien on the property based on what's called a judicial lien. So we do clear all of the items that are necessary to verify, to guarantee that when you buy a property or you even sell a property, that all situations are addressed properly and all of the documents are then recorded of public record.
All right, thank you, Susan. Andrew, if you could talk to how important the location of a home is compared to price when looking for future value of that home, so looking kind of long-term.
Yeah, I'd love to kind of give my opinion and expertise on that. The old rule of thumb that probably everybody's heard is don't buy the most expensive house in the neighborhood. Now, if you're on a budget and you're looking for the largest home possible, that actually could be your best option. But in general, you don't want to buy in a neighborhood that has 80% homes at $100,000. You don't want to buy a $175,000 house in that neighborhood. So selecting the neighborhood is huge. You have to look at kind of the feel of the neighborhood, the upkeep of the neighborhood. Are people taking care of their houses? You could buy a house 5 years ago for $120,000 in Saginaw Township, and one neighborhood could have grown 5% and the other could have grown 15%. So you really have to look up the makeup of the neighborhood as far as what the home values at that time are. My general thinking is that if you have a variety of price points in the neighborhood, a variety of home styles, a variety of sizes, and you buy somewhere in the middle or the median of that, you're going to have the best bet of growing your home value without doing extensive renovations or improvements to the property.
All right. And Laura, if you could tackle this question. As far as building a new home, which obviously might be, a couple years down for most young professionals, but it's become a little bit more popular as far as a second or third home, looking to do that. Is there anything that the bank lenders look at differently building a new home compared to just purchasing one that's already been built?
Well, really have to know what you want to put into the house. There's so much out there, it can overwhelm a person. Get with a builder to see what their building is. Some of them have certain criteria that they have to have or certain materials. It all depends on what you're looking for. You got to be realistic if you can afford the house when the full budget comes out to what the house is going to cost at the end. It's a hard decision for us loan officers, I think, to even determine what a person go up to, unless we got to go by debt to income ratios. Yes, but you got to understand what you want into your house and go from there. If you want to put a bigger down payment on it, or if you just want to put the 10% down.
All right. Julie, if you could field this question. Actually, kind of piggyback on that question as far as new homes, is there something that they should look at a little bit more as far as, where to kind of choose to build that new home, and or anything that's quite different, not quite dealing with the contractors or anything like that, but anything as far as realtors' knowledge would know as far as building a new home.
So I guess I'm kind of confused on the question. Yes, you can go ahead.
So what we'd be looking at is, besides actually picking out the contractor and making sure, you know, you're doing that correctly, is there anything else when it comes to what a realtor would give advice on someone building a new home?
Okay. So the biggest thing is making sure everything is in writing, and that through the whole entire process, you know exactly what's going on. If there's any changes, you have the change orders, but definitely staying in your budget, because when you're building, you change your mind a lot, and you either want this or that, and you have to stay within a budget with whatever you're working with the lender. And I would say the biggest thing for your protection is making sure those change orders are approved, and the communication is a huge thing in building a home as well.
All right, thank you very much. Brenda, if you could kind of talk to, as far as, you know, me coming to a title agent, what are the best questions to ask when I'm kind of looking around for that title agent that I'd want to use?
As Sue explained, there is a lot that goes into that. Searching, examining, there's so much that goes into it that really we could probably talk about for a long time. But I read an article the other day, and it said that upwards of like 30% all land titles have some kind of defect. So really, it's important to know that your title company is doing the work that they're supposed to be doing. You know, making sure that you have clear title or clean title. You can also get online, look at online reviews. That's big now, and a lot of like our generation now does that already. So that's really important to look and see what other people have said about that company. Again, title refers to the legal right for someone to own and use that property. So at the end of the day, your buyer wants to make sure they're protected, that they have that legal right. And again, a lot of consumers that have not maybe they're first time home buyers, or have not kind of gone through a purchase or sale before, will rely on their agent, their real estate agent, or their lender. So I would, you know, that's usually where people tend to go. And again, having those good relationships is all part of that between the title company and those different people involved to word of mouth. So.
All right, thank you. Just want to switch gears just a little bit here real quick. Talking about more development as far as investments go. It's kind of been a little bit of a trend lately to where some younger homeowners are buying second houses, whether it's flipping or rentals, with rental prices and properties being so high right now, and in demand. So Andrew, if you could talk a little bit to what the current environment is, and you know, kind of what to look for, just some general practices when looking at flipping a house.
Yeah, the current environment, well, a year ago was a great time. There was more inventory available, and now the house would be ready and it'd be perfect time to sell. It's a little difficult right now. The construction costs are very high. Material costs have skyrocketed over the last couple of years. So that, you know, whether it's remodels or new builds, it's just really expensive and a little bit hard to find contractors right now. So that's put a little bit of I don't know, just a challenge to home flippers. And then the tight inventory has also created a problem. The good thing is that there's a huge demand right now for move-in ready homes, but people are not buying the homes that need remodel as much as they were 4, 5, 6 years ago. So you still can get some good deals on homes that are in need of being reconditioned. So if you're going to do a DIY flip, it's a great time. If you're going to hire a contractor, expect the cost to be probably close to 20% higher than what you're thinking to get that construction done.
All right, perfect. Thank you. Annette, if you could answer this, when it comes to rentals, obviously this would also probably be in the category of flipping a home too, where we're looking at, financing a second home. If you could kind of talk to a lender's perspective, how that might be different from just your first home or, a singular home loan.
Well, number one, we need to know as the lender, are you looking to buy a single family? Are you looking to buy a 2-unit? The difference will require a different down payment as well. And then, do you qualify? They come to us, and I seem to, in the past, the customers come to me and they seem to think in their minds that they can use that rent, the full amount of rent towards the house payment and offset it. But for Fannie and Freddie, we have the secondary market that sets our rules and regulations. It is not dollar for dollar. We have to consider taxes, insurance, expenses, any interest on the mortgage. So again, a lot goes into it. I kind of step back when they call and take more time with an investor just so that I get it right. And I want to make sure that I double check the amount that is required for the down payment, because our lives change so rapidly in this business. I want to get it right up front and know that they have it. Where is it coming from? If you're buying an investment, it cannot be gifted money, so that's going to make a difference too. There's a lot of things that go into investment. So again, talk to the lender before you go shopping.
Perfect. Thank you so much.
You're welcome.
All right, Julie, if you could talk a little bit to what someone might look for as far as real estate when looking to buy something that either is ready or maybe needs a little bit of work, but to use as a rental to get some income.
So there are a lot of people who are looking, of course, for their first time home. So that's kind of that category there. They like a move-in condition. Of course, they go quick. If you're looking to look for rentals, of course, if you're paying cash, that's good. If you're financing, of course, we always send them to the lender to make sure that they qualify. But there's a lot of investors selling properties right now because the market is so high. But at the same time, there's still investors purchasing because our rental market is increasing because with the inventory of houses so low, the rental inventory is also low, which every time there's a turnover, you can raise the rents because the inventory is low. So with that increasing, there is still people buying duplexes and fourplexes because the turnover is good. The turnover is good to increase the rents, I guess I should say that way. So definitely there's still houses out there you can buy and rent probably pretty quick. It's a pretty easy rental market right now because of the inventory.
All right, thanks, Julie. Andrew, if you could talk a little bit with new technologies coming out, for example, things like Zillow. Most of our generation, that's kind of the first place they look just to kind of get ideas of homes. Obviously, right now, it's not the most effective, I can tell you, because I've been on it just curiously looking at certain things. And I know of homes that are for sale that never get on there because they are gone within a couple days. And I don't personally know what the lag time is for sites like that. But could you talk a little bit to some best practices as far as being able to get to those houses that might be in the range where you're looking at, and being able to move on those before they're off the market, just, hours or days after they go on.
Yeah, so it really puts the importance of having an agent and working with an agent. The best way to get the most up-to-date listings is to be put on, we kind of refer to as an auto email system. It's a direct email or text message notification that you'll get from our multiple listing system, which is our board of realtors kind of agent run network of homes for sale. That's where the information on Zillow and realtor.com comes from. So that's where it originates. You can get literally within a minute of the home going on the market, you can get a notification. And not only will you get that notification, but your agent will also get the notification that there's a new home in, John Smith's criteria. And you can just click it, look at what that new home is or what that price change is, or if the home maybe the deal fell through because of inspection and is back on the market. That is going to be the best way. And having your agent selected and knowing, having your set of criteria being pre-approved, it really shortens that time because you have two eyes, you have yours and your agents looking for homes for you. Instead of you just casually searching on Zillow and then putting through a web inquiry and then finally hearing back from an agent with, 3-4 hours later, it just makes a challenge. Some home showings get booked up for the whole weekend, within an hour or so of going live. So really just stresses the importance of having an agent and getting on the direct MLS notification system.
All right, thank you. So this will be for everyone essentially, and we'll go person by person here, but unfortunately, any industry where there is money to be made, there are always some bad actors here and there who do not have your best interest at heart. And unfortunately, I can tell you in my industry as well as I'm sure yours, those stories tend to shine a little bit brighter than the person who really took care of you. So with that being said, Brenda, I'll go to you first. What are some things to look out for as far as bad things that you would experience when kind of interviewing someone, whether it's a title agent or a company? Some things to watch out for.
So I don't think there's any bad title companies in Saginaw, so nobody has anything to worry about. Just kidding. So some of the things I think, again, communication is really big. Again, you can find a lot of the information online, or your agent or your lender. All of those people are going to have some influence on you. I also would say to do some homework yourself and kind of understand the process, so you will be able to see red flags when they come up. Again, in the insurance, title insurance and, real estate and lending, there is code of ethics. So, if there's been things in the past that, they'll come through and people will be able to pick up on that. I would say, yeah, call, you want to, especially, again, not really knowing maybe the area, or, you're just kind of getting to know your lender and your agent and your title company. Call the title company and talk to them. Ask them some of those questions that are important, like what's the process, what's going to happen, and get a good feel for how they operate.
Thank you. Susan?
Yes, title insurance is pretty much the last stop. So if you are educated as to what title insurance is, and you can create a relationship with someone where you can feel comfortable to ask questions, if they've had a bad experience before they get to the closing table, because we are at the end, we're the closing table. So if they've had a bad experience, sometimes it leaves a bad taste in their mouth. But if they can create a relationship with their real estate agent, with their lender, and then choose a title company. And like Brenda said, we are all very good title companies in Saginaw. If just someone who is knowledgeable that can help them through the process where they feel comfortable, I think comfort is the main key.
All right, thank you. Annette, if you could talk to kind of that same area, but with lending, some things to maybe kind of keep an eye out, try to phrase this correctly here, just to kind of make sure you don't fall into some pitfalls, if there are pitfalls, with working with certain lenders.
I look for a lot of honesty and integrity. If I can't make the deal work, I want to let you know right away. It's never an easy job, but Julie and Andrew don't have time for this. You know, they've got others to take care of. So I want to make sure that I am upfront and honest with my people. When customers ask me questions about, well, what do you think of them? You know, I am not going to slam my competition. There might be somebody that enjoys working with Laura and not me. And we've had a relationship for quite some time, but if they have questions, I will help them. It's always about the customer. If they have gone through the process, they're not happy, they want to change lenders, I'm going to say, where are you in the process? And, what's happened? Well, even though it's a rough road, you're almost at the end. Let's just maybe sit back and ask some more questions. Educate yourself and ask questions. There's no stupid question, but if you don't ask it, again, you're not going to know. So search for honesty and ask the questions. Be educated up front and do not assume. Don't assume, because we all know what happens when you do that. And that's throughout the entire process.
Laura, if you could continue on that.
It's about the same thing as Annette says. You just got to be honest with these people. If they have a question, and I always make sure that they understand that I'm here for them to help them learn the process. And again, no question's a dumb question. And as far as realtors, title companies, I tell them they're all my friends. You seek out who you want.
All right. Julie, kind of the same question, but with obviously realtors. We all know there's a lot of them out there. So some things to maybe watch out for, some practices that you've seen that kind of can lead to some problems.
I guess my biggest thing is if you're working with an agent and it makes you go, or it's a scratch your head moment, it's good to get another opinion on some things, because we all have training and ethics that we're bound to, but I would not say we're all educated the same. So definitely it's okay to get in a second opinion, but once you're in a contract, you are in a contract with an agent. But if there's a question, then you could always question and then get out of your contract if you don't feel comfortable. I believe that it's a relationship that we are working with people to help them purchase one of the biggest investments of their life. I like to build trust, and I want my clients to trust me because I'm going to work hard for them. And it is a relationship that hopefully it's for the rest of our lives that we have together. So if you build the trust and you work hard and you do everything correctly, it's a win-win for everyone. So, but if you do have the question, I would say it's okay to ask someone another opinion.
All right, thank you. Andrew?
I know, Julie mentioned ask questions, and that said ask questions. If you, in real estate, I think in our area, we're fortunate where we're a large enough community to have a lot of services available to us, have a variety to choose from, but we're small enough where the word gets around. And people that typically don't follow the best practices are out of the industry within a few years. We're fortunate, big cities have, I think, a little more issues with that, and even some really small towns because they don't have any other options or variety. If you ask an agent that you meet, if you ask them questions and you say, why should I work with you? Can you provide me a list of references? If they're a bad apple, they're not going to answer those questions very well, and they're going to delay or not get you a list of references. It's the easiest way to weed people out is by asking questions. And if there's weird responses or they just keep saying, don't worry about it, no, that's not a big deal, that's a sign right there. So just ask questions. And, from my point of view too, and this is zero to do with Laura and Annette, but there are, in my opinion, there are some mortgage brokers that have been around the area or in other parts of our state that people will bring, they'll say they're working with, and, we'll ask them a question. Why are you going FHA? Why do you want 6% in concessions? And they just say, because my lender said that. And then you follow up with, well, can you do a conventional? And they say, they didn't tell me that one way or another. And we'll have a conversation with the lender and say, why aren't they going conventional? And they don't have a good response. And they're putting them in FHA for some weird reason, which is going to limit your ability to actually buy the house. And that 6% in concessions, when they only need 3 or 4%, there's just some, again, we'll ask the questions to help weed out the bad apples, just like Annette and Laura will ask the questions to weed out the bad apples. And then if the buyer asks questions, you'll find them.
Yep.
All right, thank you. So at this time, if anyone has any questions, if you could type those on the chat. And if it's for a certain panelist, go ahead and put their name right at the end of it. So we'll wait to see any questions, and I guess I'll ask just a couple until we get a few from the audience. Annette, just looking at interest rates, obviously these are pretty weird times, but looking for a forecast, where do you see interest rates, let's just say a year or 2 years from now? I know it's not hard to get out the crystal ball and look at that.
So there's never one, and there's never a bell at the end, at the bottom. But in what I'm hearing, they're gonna stay low. That's pretty much what the forecast is telling us. So even in an election year, they tend to stay low. But I believe one of the predictions was until around 2023, we're going to see them stay on the low end. Laura, anything different?
Same thing
Yeah.
here. They go up and down, eighth here, eighth there, up and down, but they're low. They're awesome right now.
Mm-hmm.
It's crazy.
All right, and then Julie, same question, but on the real estate over the next couple of years. Obviously, kind of it's kind of like asking me what the stock market's going to do. I can give you an idea, but it's hard to really tell you. So if you could speak to that.
So I'm always afraid to say anything because early on in the business, I said your house will never depreciate. And of course, I stuck my foot in my mouth in 2008, 9, 10, because I didn't believe that could happen like that. So, of course, we're constantly increasing probably in the last year, even through COVID. Even when there was a pause, we were still selling houses in that time. So I would say as long as the inventory is low, and the interest rates are low, the prices are still going to continue to rise. And I think it'll still be a strong market. At the same time, I don't know what's going to happen with COVID. I don't know how many people are out there not paying their mortgages. And I kind of wanted to kick that off to Zillow, how you said that. So Zillow tracks information from all areas. So they actually track RealtyTrack, and RealTrack actually tracks people who are 3 months behind in their mortgages. So if they're not paying for COVID, it's going to come up as a foreclosure on Zillow. So there will be a flood of houses that appear to be in foreclosure, but they're not. So that's where you get the misinformation from Zillow. But going back to the future forecast, which I said I would never predict myself ever again, but it's definitely a good market. I see it being a great market even early next year. At the same time, I don't know what the effects from COVID are going to play for the people who have been affected hard.
All right, thanks. Andrew, if you could talk to that as far as, with the surplus of shoppers and low inventory, kind of looking into 2021 and the spring and summer. And then you add on top of that the economy, which whether we've felt the full effect of that with unemployment, do you actually see that affecting the market, or when it might affect the market, if it even does? If you could answer that.
Yeah, so I kind of enjoy this part of real estate. My undergrad degree is in economics, so I'm a really big stats person, and I like to follow all that fun stuff. Real estate is a supply and demand industry. It does not follow the stock market. That's a really large misconception. So right now, giving that low inventory, the low supply and high demand, obviously the market's doing great. There is a point in time right around what we call month supply of inventory, right around 6 months supply of inventory. We're at around 2 months right now. That is an even keel market. It's fair for buyers, fair for sellers. We're expecting that low inventory to go through 2021. If it bounces back, even if we start gaining ground, it's going to be an extremely good market, as it'll give more homes, more variety of homes to purchase with a strong demand. The unemployment part of it, the U.S. has 70% of jobs are labeled as very secure jobs. And, from everything, if you break down the unemployment data, the hardest hit areas are retail and hospitality, which are not your typical home buyers. So it's not going to affect the market as strong. Now, if that starts to trickle down into those more secure jobs, then we could be in a little bit of a pinch. But I think that's something we're going to have to kind of wait and find out. The other piece of information that's also a very large misconception is that home prices go down during a recession. The only time that's actually happened in history is during the last recession that's so fresh in our head. And that was caused by the financial and housing industry. So if the recession is not caused by that, it does not mean that the prices are going to go down. They may not climb 5-10% a year, but they'll stay fairly even based on what history tells us. So again, we're looking at a good 2021. I think as long as the mortgage rates stay low and the inventory stays at least on that 6 month supply or less, it's going to be a growing market.
All right, thank you. Still have a little bit of time. If you want to send in a question, please do in the next couple minutes. I'll ask Laura and Annette. Laura going first here. As far as refinance, that's a pretty hot button topic right now with rates so low. What's a good rule of thumb? Obviously, we can't get too specific, but just in a general sense, when's a good time to refinance?
Probably when you know that you have close to, 80% loan to value, or your rate is a point or more over. It's a case by case. I usually go through it with the person, ask them what their balance is, what their rate is, and I kind of plug in some numbers to see if it benefits them first before they go on for the loan application. I don't like to waste their time. And if it's saving them $100 or so and they like it, then we proceed. But you got to look at the whole picture, though, in my opinion.
All right.
I agree with that. And it's right now, too, with refinancing, it's a great time to borrow money. If they've got equity in their house, they could do a couple different things at the same time. They could go from the 30 to a 20, take $20,000 out. They could remodel. They could, pay some other debt off at higher interest rates. So there's a lot of different reasons that people are refinancing right now, not just that one point of lowering their interest rates, because most of them probably did it once or twice back when we were busy before in 08, 09. So, most of them already have 4% interest rates. It might be stragglers that had some credit trouble, and now they're finally having the opportunity to refinance at this time and take advantage of it.
Yep, exactly.
Thank you very much. Julie, Ken Volker posed a question here. Have you seen, as far as the trends in the industry, that some people are looking for more of those new homes just because of everything you do see on, HGTV, all these different home remodels and buying? Have you seen that to where people might be discouraged by an older home?
I wouldn't say discouraged. The way it's stated, I just read that as well. I don't know why I'm echoing, but I know that everything is modern, but some people still like that character. And I have, you have, let's say, an older generation, and they're searching for a home. They don't want that modern vibe. Some of them just want character, and they want the calmer colors or the not so modern feel. So I totally agree with what he states, that he's basically stating that the TV shows are saying this is how your house should look in order to sell, which is probably what most of the flippers are doing, is they're setting it up for the first time buyers, because that's kind of what they're looking for. But there are a lot of the second time buyers or the downsizers, they don't want all that modern feel. They want the cozy, they want the warm. And that's kind of what the older homes, they provide the character, and you don't need to basically paint everything white, if that kind of way. I think that's what he's stating in his chat.
All right. Last chance for any questions. Brenda, if you could talk to anything we might have missed in relationship to dealing with titles.
Yes, I will. I do want to say, I think there was another question. It was before, was it Ken's, that Steve has a question out there too. Just didn't want to get that missed. Again, with title, yes, we are at the end of the transaction where people really think that we're players in the game, but the process actually starts early on. And there's preliminary work and different things that kind of go into that, and getting everybody on the same page. So again, as soon as you are talking with your lender or your real estate agent and so forth, it's good to go ahead and get to know who you're going to be dealing with at the closing table, and get a good feel for that that's going to be a right fit for you. With the home prices going up, and because of the low mortgage rates and so forth, all title companies, I think I speak for everyone anyways in our county and probably the whole state of Michigan, is very busy. It's a busy time for everyone, lenders and real estate agents, so forth. So if you're a real estate agent or a lender, just that communication right up front and getting things going really helps the process along the way and kind of keeps things moving. So lastly, again, I would just say probably something that I've heard from my clients, and even deal with some investors and for sale by owners, is they want communication. It's probably everybody on this panel would agree that's that what clients want. They don't want to wait to hear that something's wrong or something's hold up. Nobody likes to hear bad news, but the faster and more efficiently that it's dealt with, then the process can move on and go more smooth from that point.
Mm-hmm. All right, thank you very much, Brenda. Susan, some last thoughts from you?
I think the most important thing that we all on this panel feel is we want our customers to feel comfortable, to be informed, to give us another deal. So I think that working together is the main thing, and communication is so key in this business, keeping everybody informed at all times. It's difficult these days because the rates are so good and there's so much activity. We are closing deals like crazy right now. And that's good. That's good. That's what we want. But keep everybody informed along the way. No surprises at the end.
Got it.
Thanks so much, Susan. Laura, final thought?
Same thing, just communication is the big thing right now with everyone. People will leave, and if you have another rate that's lower, you got to talk to them. Where did you get this at? Maybe you can match it, but that's it. Communication is the number one, guys, with everyone.
All right, thanks,
Be
Laura.
kind to us.
Be kind to us.
Is that your closing thought, Annette? Be kind.
Yes, please be kind. We're doing the best we can.
It's hard.
Julie, if you could.
So I'm going to actually answer the question that Steve had. He said, what have you learned from clients on why they are choosing to buy and or sell during this time? I know I personally have sellers who they probably purchased maybe 3 years ago, and they said, we just want to sell. We're going to move into our parents' basement and save some money because actually they're going to make a $40,000 profit. So they just want to sell because and then they're going to purchase at the low interest rate when they're just going to sit and wait until they find the right one, be at the low interest rate, don't have to have a contingency. So that's what they decided to do. So I think sellers are selling like investors are selling because this is the time. If investors bought them cheap in 08, 09, 10, now they're going to turn around and sell them. They'll probably wait till the market falls again and repurchase. So that's what investors are doing, or they're buying bigger, if that makes sense. They're going to the bigger units. And of course, you have the people who are always going to sell anyway if they're going to transition into downsize. And it's a great rate for older people to still finance. Final thoughts. I just think it's important to ask questions. I think education is key, even if you're a buyer and or seller, to understand the whole process you're going through. I'm big on that. I want people to understand everything about the process, and if I'm here to educate them, even if they just ask questions and then they decide not to sell a year later or buy a year later, that's okay as well. I like to help them through the process of preparing the house for the market. And same thing with the buyers. I'm big on pushing them to the lenders, which you guys know as well, to make sure that they understand everything. Even if you need closing costs, I don't like percentages. I want the dollar amount so that they waste no funds. So questions are everything.
Thank you. All right, Andrew, closing thoughts.
Just don't be scared of buying a home. I think that last downturn is, still in everyone's head because it was just a little over a decade ago. That's not the norm though. That was the exception. So don't be scared. Like Julie said, ask questions. You work with the right people, you'll get a good house. And it's just, it's a great feeling to own your own home and be able to do what you want in it, hang pictures wherever you want, paint whatever walls you want, and make the repairs whenever you want instead of having to rely on a landlord. So just ask questions, don't be scared, and you can start 18 months before you're ready to purchase. Talk with an agent, talk with the lender, get everything planned out, kind of get all your ducks in a row, and then when you're ready, you can jump right in and make the decision.
All right. Thank you, everybody, for joining us. Thank you so much to all our panelists. Everyone would be giving you a round of applause right now if it wasn't for COVID. So Zoom's not great with that. So thank you so much. If you have any additional questions about the information that we just all have heard, please contact the YPN or Steve Hensley directly. You can reach him by email at ypn@saginawchamber.org, and he can connect you with those resources.